income tax. Let's start there. Give me the basics that you know. So if I ask you, what is income tax, what are you going to say? What comes to mind?
It's like the tax you would pay for your, gross income.
Okay, what else? Keep going.
Anything that you, received in cash or otherwise.
Okay, good. So gross income is going to be all the total, everything. So when looking at taxable income is basically what is subject to tax. So this is subject to tax. And then you have to use the tax tables to calculate how much you actually pay to SARS. So when looking at taxable income, you'll have gross income. And gross income is everything. Total. All income that's earned or received. It doesn't matter what it is. It could be even like a capital gain. You would include that as well as part of your gross income. It's a special inclusion. Okay, so you get things that are specifically included, and you get things that are exempt. You get exempt income.
Yes.
Okay, so that's looking at gross income. Certain things you have to put in, certain things you take out. And then that's going to give you an amount that you're going to be using as a subtotal, which will then be taken off against your deduction. So less deductions, so afterwards you'll have deductions and allowances. Right, and deductions will either be specific deductions or you'll have general deductions. And then ultimately what you want to get is this, which is the taxable income. And the taxable income here will be subject to tax. Okay, does that make sense?
Yes. Yeah.
Okay, so gross income is everything. Remember, with tax, you have to show everything, and then even if an amount is zero, you actually have to show zeros in tax. Right, that's how it works, this particular module. Everything you need to show, and if there's a zero, so for example, something like, let's say you get a fine for speeding, a speeding ticket. Would a speeding ticket be an expense?
Yes, it would.
Yes, it would. So would you classify that as a deduction? You would, but it would be a non-allowable deduction.
Yeah.
Okay, SARS won't allow you to claim your speeding tickets as a deduction.
Yeah.
Okay, but if you make a contribution to your pension fund or your medical aid, will SARS allow you deduction there?
Yes.
Yes, they will. So those are deductions that you have to show separately. So even for something like a speeding ticket, you would still show it as a deduction, but you would show it as zero, or you would show it as non-applicable. Right, meaning you wouldn't be able to claim it. Okay, right, so coming back to the study guide, Learning Unit 4 was looking at background and was looking at the deductions. Right, so you'll see here, obviously they've indicated that you need to go through the prescribed textbook, and then they give you some calculations. So what I want to try and focus on is the calculations. I want to show you how to actually do these calculations. Right, so what should you be looking for? Obviously the background is what we've discussed, so you know that gross income is everything. What they do talk about here is exempt. Okay, exempt covers or gets covered in a separate chapter. Okay, exempt income could be something like your interest. Okay, a portion of your interest is exempt. Fringe benefits are things that you specifically include. Right, it's a fringe benefit. So if I have a car allowance, or if I have the use of a vehicle, that needs to be included as part of my gross income. Okay, general deductions, that's a separate unit. Okay, we'll discuss that in detail in study unit 6. Right, so in this study unit, we're only looking at taxable income. In other words, how much are we actually going to have, and is that subject to tax? And if so, how much tax do I pay on that amount? Right, they've described a deduction. You should know what a deduction is. We've been talking about pension. We've been talking about medical. We've been talking about a speeding ticket. Okay, a deduction is anything that qualifies as an expense that can be claimed against your income tax. In other words, if I've got gross income here, okay, let's say let's say you've got a second property.
Okay.
And you're collecting rent. Okay, would that be part of your gross income?
Yes.
Definitely. But now, if you're collecting rent, do you agree you're also going to have to pay for the maintenance of that property?
Yes, yeah.
Okay, so maintenance, repairs, all of that stuff. Would you be able to claim the maintenance and repairs as a deduction against the rent that you're collecting?
No.
Yes, you would. Okay, because it would be part of that operation.
Okay.
Okay, so if I've got income, anything that relates to that income that is a allowable deduction will be deducted. Okay, they talk about a general deduction formula, but it's very specific. They talk about different, how can I put it, criteria. Okay, criteria is important. So if you follow the criteria and we can tick all of those boxes, it's then considered allowable and we can deduct it. As long as we tick all the boxes. If we don't tick all the boxes, then we can't include it. Right, so something like your pension. Would your pension be deductible?
Yes.
Yeah, and your pension will be deductible against what? Well, your salary, your income. Okay, so deductions are normally linked to an income. Right, so if you're earning income as a salary, then any deduction against your salary could be deductible. As long as it meets the definition of the general deduction formula, and it's part of your deductions and allowances that you've actually incurred. Okay, so you've paid it. You've paid for the pension, or you've contributed towards the pension. Is that right?
Yes.
Okay, good. Alright, so coming back to this, they say this order of deductions implies that all general deductible expenses have been deducted. Notice all other, as long as it meets the specific rule. Okay, that rule is covered in a separate chapter. Some of the deductions have specific limits. Okay, a limit means what?
It's what you can't go past an amount.
Correct. You can't deduct more than a specific amount. Good. Right. So something like a pension contribution has a limitation. Okay, you can't deduct more than a specific limit. Okay. This is important in terms of a golden rule. Right. So SARS allows you to deduct certain expenses, but only limited and subject to your gross income. You can't deduct more than what you've earned. So for example, let's look at the rent situation. Let's say I'm getting 20,000 Rand a month rent, okay, for a property, and there's maintenance and repairs. And let's say this month we had lots of repairs and lots of maintenance. So this month we had a total of 25,000 Rand worth of repairs and maintenance. Okay, would SARS allow you to claim more as a deduction against the income that you've got?
No.
No, they wouldn't. Okay, it will be limited to. But obviously, if it's 20,000 Rand a month, it'll be times 12, which is 240,000 a year. Okay, so if I'm looking at the full 240, well then the full 25,000 will be deductible. Okay, because it's subject or limited to the actual income that you've derived. So if I've earned income, I can't claim more deductions against that income to claim from SARS rather than having to pay to them. Is that right?
Yeah.
Okay. So coming back to the textbook study guide, that they talk about here. These expenses listed in section 23 of the Income Tax Act. Okay, they're very clear about the deductions. Right, remember, tax is all about the law, okay, about rules. Okay, we need to follow the rules. So when looking at the Income Tax Act, the actual act specifies what you can and what you can't claim. Okay, generally, they show you what you can claim. So anything that I can claim will be outlined by the act. And if I'm a salaried employee, you'll be able to claim very few deductions. Why? You're salaried. Okay, if you're running a business, it's a little bit different. Okay, because now you'd be considered a business, and you have a business, or you have business deductions. Okay, so what's the focus in this module? Tax 1501. Is it business or is it individual?
It's individual.
It's individual, exactly. Okay, so it's like you're working and you're earning an income, what can't I deduct? Does that make sense?
Yeah.
Okay, so let's have a look at the first deduction. Pension fund, RA, and provident. Right, where does this come from? It comes from the budget speech. Okay, remember every year they deliver a budget speech, and the government tells us what the rules are around contributions towards our retirement.
Okay.
Okay, what is the difference between a pension fund and a retirement annuity? Is there a difference?
A pension fund, isn't that obviously when you retire? And I'm not sure.
Okay, so pension fund, there must be an employee-employer relationship. There must be. Okay, so if you're employed by a company, there can be a pension fund that will exist as a deduction against your income, but there must be an employee-employer relationship. Okay, a retirement annuity is a standalone product. Okay, standalone means you don't have to have an employer-employee relationship. Right, an individual that isn't employed can take out a retirement annuity if they choose so. Right, so an individual would take out an RA separate to any employer-employee relationship. Okay, and that's what an RA does. An RA it's totally standalone. Okay, you can either be self-employed, you can be unemployed, you can be whatever the situation is. Okay, employed, and you can still have a retirement annuity. It's a separate product that would supplement your funding that you're going to be setting aside for retirement one day. The pension fund has to have an employee-employer relationship. That's what differentiates those two. Right, and a provident fund is the same. There needs to be an employer-employee relationship. So pension fund and provident, okay, both require a relationship between you and an employer. You have to be employed by a company if you want to create or start a pension fund. Okay, for retirement annuity, you don't have to be employed by an employer. Right, you can be a separate individual on your own, making your own contributions to an RA. It's perfectly allowable. Right, it's additional savings towards retirement. Right, so here they've given you a note about the contributions. Right, so what am I going to be doing? Well, do you agree I'm going to be earning income? That's going to be classified as gross income. A portion of that will be contributed towards a pension fund. Right, so what is SARS going to allow you to do? Well, they're going to allow you to deduct a portion of that from your gross income. So now, what does the pension fund contribution do to your taxable income? Does it increase or decrease? Increase or decrease? Decrease, right?
Sorry? What was the question?
The question was, if I'm contributing towards a pension fund, what are those deductions going to do to my taxable income?
It'll decrease.
It'll decrease the taxable income, exactly. Because you're making a contribution. Right, so do you agree if I earn income, I would have had to have paid tax on it? Do you agree?
Yes.
Okay, so let's say the income is 10. Okay? And the pension contribution is 200. Okay? What is the taxable income going to be? 9,800.
Yeah.
Okay, because I get to claim that benefit against my gross income. So I actually end up paying less tax.
Oh, okay.
Okay, that's why we've got two things. We've got tax avoidance and we've got tax evasion. Tax evasion is illegal. But if you choose to hide your income and not pay SARS tax, you'll go to jail. Okay? If I declare my income, and I pay my taxes, but I pay the lowest possible amount, well then that's legal. Okay, so I make use of my deductions. Okay, that's tax avoidance. Okay, so tax avoidance would be legal, and that'll be using your deductions. Okay, allowable deductions. Things that SARS will allow you to deduct when calculating your taxable income. Got that?
Yeah.
Great. Alright, so coming back to the book. They talk about the retirement fund contributions. Okay, here's a nice summary. Okay, the RA contributions have changed compared to previous years. Okay, recently, about a year ago, they changed the legislation, and it used to be like 15% or 7.5%. Now it's different. Okay, so this is new in terms of retirement fund contributions. Okay, so pension, provident, RA. It's all three of them. Doesn't matter which one I'm contributing towards. It's going to be applicable to all three of them.
Okay.
Right, so what must we do? We need to calculate the percentage limits. Okay, so what does that mean? Well, it's 27.5% of the greater of remuneration or taxable income. Okay, what is remuneration?
It's your total income.
Yes, it's what you actually derive from your employer. Do you agree?
Yeah.
Yeah, remuneration is basically like your salary or your wage. Right, taxable income is after those deductions. Do you agree?
Yeah.
Okay, so you are allowed, right, a limit of 27.5% of the greater of your remuneration or your taxable income. Right, either or would be your limit. Okay, so that's what we need to get. Okay, with a retirement contribution, you need a starting point, you need a limit. So work out the limit, get the limit. Okay, the limit means this is the maximum that could be claimed. Okay, and how much is that? 27%. Well, 27.5%. Okay, that's the first bit. Right, get a limit. Once you've got the limit, then you'll see here, we need to look at the contributions. Right, so there's two things to consider here. Okay, let me show you this. Gross income. Okay, let's just use 10 again. Okay, then you've got deductions and allowances. Right, if I'm looking at my retirement contribution, okay, you're going to be earning an income. Okay, remuneration. Right, and then your remuneration is going to be part of your gross income. If I take off other deductions, I'm going to get taxable income. Right, what we need to calculate is how much are you allowed to claim? Right, so remuneration and taxable income. How much could possibly be claimed as a contribution towards retirement? That's what you first need to work out. Right, so you need an amount, a limit. Okay, so how much are we allowed to claim as a maximum? Right, then we need to look at, so then now we look at what we've actually contributed towards retirement. Okay, so in this example, we said we had 10,000 as the gross income. Okay, if I take 27.5% of the 10,000, that's going to give me 2,750. Do you agree?
Yeah.
Okay, what does that 2,750 represent? It represents the limit. Okay, the limit meaning the maximum that I'm allowed to deduct. Okay, so let me ask you this. If I contribute 5,000 Rand a month towards an RA, would I be able to claim the full 5,000 as a deduction?
Yes.
No, you wouldn't. Okay, because the limit is 27.5% of your remuneration.
Okay.
Okay, do you see that? So that's why this would be limited to 2,750. Only 2,750 will be allowed as a deduction. Okay, so looking at this, if you contribute more than what you're allowed to, do you get a benefit from SARS?
No.
No, you don't. Okay, SARS will only allow you to deduct up to 27.5% of your salary. Okay, your remuneration or your taxable income.
Okay.
Okay, does that make sense? So if I contribute 5,000 to my RA, I'm not going to be able to claim all 5,000. I can only claim 2,750. Okay, here's the other example. If I contribute 1,000 towards an RA, okay, how much do I claim as a deduction? Do I claim 2.5? Not 2.5, 2,750, or do I claim 1,000?
1,000.
Exactly. You only claim what you contribute. Only 1,000 is claimable up to a maximum of 2,750. Does that make sense?
Yes.
Okay. And that's how the deduction works for an RA. Happy?
Yes, yes, I am.
Okay, let's go back. Okay, so the next bit there. Total contributions are deductible but limited to the lesser of. Okay, notice lesser of. The percentage limit or 350,000. Okay, so why do we have the second bit? Well, let's look at it. Okay, so in this example, if I have 10,000, I'm going to be able to claim 2,750 as a deduction. If I contribute 5,000, I'm not going to be able to claim all 5,000. It's limited to this, 2,750. Okay, let's assume now that your income has gone up. Okay, I'm just going to copy this down here as another example. Okay, I'll send all of this to you after the session today. Okay, so you'll get all of this. Right, so 1 million. Let's say it's more than 1 million, because 1 million won't be enough. Let's say 2 million. Yeah, 2 million will work. Right, let's assume that your gross income is 2 million a year. Okay? 2 million times 27.5% gives you 550,000 as a limit. Okay? Let's say if I contribute 400,000 a year, okay, towards my pension, okay, would I be able to claim the 400,000?
Yes.
No, you wouldn't. Okay, because what does SARS say? SARS says that this limitation over here, this 550,000, 27.5% of 2 million remuneration is 550,000. This is limited to 350,000. There's it there. Okay, do you see that? 350.
Okay.
Right, so what does that mean? Well, this means an individual who earns a lot will not be able to claim more than the 350,000 Rand limitation placed on the 27.5% calculation. Does that make sense?
Yes.
Okay, so in this scenario, if I earn 2 million a year and I times that by 27.5%, the limit would be 550,000. But then this limit is limited to 350,000 a year. Okay, so if I contributed 400,000 Rand over the year to an RA, only 350,000 of those deductions or those contributions will be claimable as a deduction. Makes sense?
Yeah.
Okay, that's what you're looking at here. Okay, so this is high net worth individual. Right, someone earning more than 2 million a year will not be able to claim more than 350,000 in that year because it's limited to the lesser of.
With the first step, it says 27.5% of the greater of remuneration or taxable income.
Yes.
So do you have to do 27.5 of the remuneration and then do the 27.5 for the taxable income?
Yeah, it will be 27.5% of both. And it'll be the greater of, so whichever amount is bigger.
Okay.
Okay, we'll look at some examples later and then hopefully it'll make more sense then.
Okay.
Okay, but greater of means the bigger amount.
Yeah, yeah.
Okay, so they'll allow you to use the bigger limit as a deduction. But that deduction limit is limited to this, 350.
Okay.
Got that?
Yeah.
Okay, great. Okay, then there's just a note here about the fourth schedule of the Income Tax Act. This is just more additional information. They look at remuneration and what determines remuneration. So remember earlier I asked you what is remuneration and you told me income. Okay, remuneration isn't just remuneration. Where did I write that? Here's it. Remuneration. Okay, this word over here, asterisk, the Income Tax Act defines what constitutes remuneration. Okay, meaning you can't put whatever you want in remuneration. You have to follow the rules. Right, so remuneration is your salary, any fee that you generate, any bonus that you get, any gratuity, any pension, any leave payout, any voluntary reward, any commission, any overtime. Okay, that's what you're allowed to include in your remuneration. Okay, so remuneration means what am I going to be using as the base for my calculation for my pension contributions? Does that make sense?
Yeah.
Okay, so if it's any of those things, I will include it as remuneration. But if I have the following, I can only include a portion of it. Right, so if your employer, if they give you a travel allowance, can you include the full travel allowance as your remuneration?
No.
No. The remuneration only includes 80% of the travel allowance. 80% of the tax value for the right of a use of a motor vehicle. And fringe benefits received from the taxpayer's employer. Okay, only from the taxpayer's employer. Got that?
Yeah.
Right, so that's just specifying what remuneration is. What can I include and what can't I include? Happy? Is that alright?
Yes.
Okay. Right, so here's your first example. You've got a pension contribution here. Okay, so Casey's 35 years old and unmarried.
Okay.
She receives a salary of $390,000 for the current year of assessment. She also received a bonus of 35. Okay, as soon as you see the word bonus, you should be thinking about remuneration. Do you agree? We just read it.
Yeah.
Okay, so is a bonus included in her remuneration? Yes or no?
Yes.
Yes. Okay, we just read it. Right, so you have to include the 35,000 as part of her remuneration because we're trying to find her remuneration when working out a deduction. Okay, what else do we have? Other income not received from her employer. Notice, not received from her employer. For the current year of assessment, amounted to 65,000. Okay, she made the following contributions. Right, RA contributions 17,000. Pension fund contributions 27,300. Calculate Casey's taxable income for the current year of assessment if you assume she had no other income or deductions. Okay, so let's go back to our workings. Let's do this example. Okay, I'll show you how to do it. Example, what number is this? It doesn't say. What page is it? 64. Okay, so what did we just look at? We spoke about the format. Do you agree format doesn't change, right?
Yeah.
Okay, so I'm going to have a format like this. I'm going to have gross income, I'm going to have deductions, I'm going to have taxable income. Okay, this is how I would lay it out if this was an exam. Okay, let's go back to the question. Let's read it. Okay, let me shrink this so I can put both on the page. Okay. Let's move this up rather. Okay, that should be able to fit. Yeah, that fits. Okay, just put it up. Okay, there we go. Right, so if I've got Casey, 35 years old, unmarried, she receives a salary of 390,000. Okay, does this meet the definition of gross income?
Yes.
Definitely. Okay, so I'll write salary here. Okay, this is how I would lay it out if this was the exam. Okay, because obviously the exam wants you to calculate taxable income. Right, so I'll show salary there, and I would show salary of 390,000. Okay, then they say she also received a bonus. Is a bonus part of her gross income?
Yes.
Yes. Okay, gross income means everything she gets. Okay, other income not received by her employer for the current year of assessment amounted to 65. Is that part of her gross income?
Yes.
Definitely. Okay, gross means everything. Other income, we need to put in 65,000. Okay, what else do we read in the question? Retirement annuity fund contributions. Okay, so here at the bottom, deductions, I'm going to have RA contributions and pension fund contributions. Okay, we know that these two need to be calculated separately in terms of what we can or can't claim as a deduction. Does that make sense?
Yeah.
Okay, so the RA contributions in brackets were 17,000. The pension contributions were 27,300. Okay, those are my deductions. Now I need to apply, so now we have to apply the tax rules. Okay, so let's go back to the tax rules. Here's it. Where's that bullet, the bubble? Here's the bubble. Okay, so step number 1, calculate the limit. Right, how much is she allowed to claim? Right, well, if I look at this scenario, okay, we've got a salary, we've got a bonus, and we've got other income. Okay, we need to know what this is, remuneration. That's the key. Question mark. How much is her remuneration? Okay, so let me ask you this. Is salary part of a remuneration?
Yep.
Yes, it is. Is the bonus part of a remuneration?
Yes.
Yes, it is. Is the other income part of a remuneration?
No.
No, it isn't. Okay, so if it's not part of remuneration, I won't include it. Okay, so what does step number 1 say? Step number 1 says, get 27.5% of her remuneration. So, 27.5% of her remuneration, which is how much? Open brackets, 390,000 plus 35,000, close brackets, equals. Let's see what that gives us. Brackets, 390,123 plus 35, close brackets, times 0.275. That gives me 116,875. Okay. Right, that's how much you've got there. 27.5% of her remuneration, which was the bonus and the salary. Okay, 35,000 plus 390,000. Okay, 390,000 plus 35,000. Okay, then I need to times it by 27%. Okay, then they also had taxable income. Right, so what would my taxable income be? Well, we need to check. Okay, taxable income is going to be how much?
390 plus 35 plus 65.
Yes. Okay, because it's taxable. Do you agree? Is she going to pay tax on all of this? Yes. Right, if she's earning it, she must pay tax on it. Does that make sense?
Yeah.
Okay, so taxable income is going to be the total. So sum up that. Come on, sum up this. Okay, there's it. Right, so that's taxable. Okay, so I've got 27.5% of remuneration. I also need 27.5% of taxable income, which I can put in here as 490,000. Okay, and how much does that work out to? Let's check. 490 times 0.275. That gives me 134,750. What does the rule say in the legislation? It says calculate the percentage limit greater of. So which amount can she claim?
The taxable.
Exactly. Okay, and I would be showing all of this. You have to show all your calculations. Okay, because normally it'll carry marks. Okay, so show 27% of everything. Okay. Got that?
Yeah, I do.
Okay, good. Right, so now we need to look at the second bit. Step 2, total contributions are deductible, but limited to the lesser of. Percentage limit or 350. Okay, lesser of. Limit and 350. So how much is she going to allow to claim?
13475.
Correct. She can only claim this. She can't claim 350,000. It's limited to the lesser of. Make sense?
Yeah.
Okay, so how much were her contributions? Well, minus 17,000 here and minus 27,300 there. Right, so if I look at this, if I add those two amounts together, I get 44,300. Is that more or less than this figure?
Sorry?
Is the total here more or less than those two figures?
It's more. It's less.
It's less. Okay, 44,300 is less than 134, right?
Yeah.
So can she claim all of that?
Yes.
Yes, she will. So what is she going to end up paying tax on? The difference.
Yeah.
Okay, so if I sum up all of this, that's going to give me what she earns. Okay, then I've got my deductions, and that's going to give me my taxable income. Okay, so taxable income here is going to be this minus your deductions. Right, which is 445,700. This would be subject to tax. Make sense?
Yeah.
Great. Okay, let's go back to the textbook. Let's see what else they give you. Okay, they gave you that. Okay, they gave you a working here. Okay, their working looks very good. Okay, it's similar to what we discussed. So, what was the final answer? Yeah, okay, the answer's the same. Yeah, 445,700. Okay. Right, next bit. Donations to a public benefit organization. What does that mean?
So it's like how do I say it? Like it's for the public's benefit.
Yes, charity.
Charity. Yeah.
Okay, like your SPCA. Okay, so if you're contributing money towards the SPCA, as long as that benefit organization is registered with SARS, you'll be able to claim a Section 18A donation allowance. Okay, so do we like allowances?
Yes.
Yes, because allowances reduce your taxable income. Right, but it's only limited to Section 18A public benefit organizations. Right, so as long as you're registered with SARS as a public benefit organization, you would be allowed to claim any deduction that you make to that public benefit organization.
Okay.
Got that? Okay, great.
Is it limited to amount or?
Is it limited to amount? Yeah, 100,000.
Okay.
I don't think they mentioned it here, did they? Yeah, I don't see it here. Yeah, donations for individuals are 100,000. Let me bring up the tax booklet. Do I have it here? Tax booklet. Okay, let me just put up the tax booklet for you quickly.
Okay.
Okay, so this is a tax booklet guide from PKF, Chartered Accountants and Business Advisors. All different companies bring out these tax guides. Okay, I'm just showing you this tax guide. This is the 2017/2018 tax year. Okay, so how does the tax year work? Okay, this is something that you would have covered in terms of the first few chapters. Let's just discuss it. Tax year for an individual starts on the 1st of March and ends on the 28th/29th of Feb every single year. Okay, so if you're writing your exam for tax 1501 bracket semester 2 2017, you will be using the tax rates for the tax year ended 28 Feb 2017. Okay, i.e. the 2016/2017 tax year. Okay, remember tax is always 1 year behind. Okay, because earlier in the year the finance minister announced the new tax rates, and then they would have announced the tax rates for the 2017/2018 tax year. Does that make sense?
Yes.
Okay, I think I might have, let me just check my files here, just to see if I have an old 2016/2017 one, because that's the one that we actually need to look at. I'm just trying to find it here quickly, let's just see. I think I might have something. Okay, SARS, 2015 to 2016, no. I want 2016 to 2017. Okay, no, I don't have that here. Okay, but let's download a copy of it then. I'm going to close this one, we don't need it. Okay, so SARS 2016/2017 tax guide. Okay, treasury.gov, here, budget, okay, no, I want an actual guide. Okay, this is probably good, treasury.government. Oh, here, PKF again, let's download the same one, PKF. Okay, here's it. Here's the 2016/2017 tax guide. Right, so anything in this tax guide is examinable for you for this semester. Okay, that's the legislation that you're going to be looking at. Right, perfect. Okay, so that's what we're going to be focusing on here in terms of the deductions. Right, have you looked at these questions here at the end of the book? Did you have time to go through those?
Yes, I have.
And how did they go?
They went quite well for some of them.
Did you struggle with any of it?
I did struggle with some of it. I took the questions that I struggled with down. It was question 5. You know, in this book that you're looking at now.
Yeah.
It was in chapter 5, the self-assessment 5.4 and 5.5.
Oh, chapter 5.
Yeah.
Okay, so chapter 4 you good with?
Yeah.
Happy with all of it?
Yeah. Well, I've done that self-assessment. Yeah.
Okay. Do you want to do one? Can I show you one, or do you want to do 5.1 or 5.2?
No. You can. Well, yeah, we can do one.
Okay, let's discuss one, just so you have some background as well so you can see how to approach it, okay? Right, let's see what questions, okay? The short questions I think you'll be okay with. Let's look at the long ones. Okay, so here's one for 14 minutes. Okay, here's a longer one for 24 minutes. What else do we have here? Okay, that's only 2 questions. Okay, let's do the longer question. Okay, just to see if you're okay with the actual workings, the understanding. Okay, it's very important that you understand what you're doing.
Okay.
Right, so let's do this question then. Let me show you how to do it. Let's get our notes. Where's our notes? There's our notes. Okay, so activity, what is this? 4.3.
Yes.
What page is it on?
Let me just check here.
What page? 67. Okay, I got it. I got the page number. Dershan, are you still there?
Yes.
Okay. Right, yeah, it's on page 67. Okay, so, okay, let's read the question first. Right, so this is how I would approach it. It doesn't matter what the exam is, okay, or what the question is. This probably was an exam paper that they've taken from a previous exam. Okay, so what am I going to do? I'm going to look at the required first. That's good exam technique. Okay, this is how you need to approach questions. Calculate Jennifer Green's tax payable for the current year of assessment. Right, so I already know what I need to do. I need to draw up that template I had earlier. Okay, so let's repeat what we did earlier. There's the calculation. That's the format. Right, so you create this for yourself. Right, you write down the heading for gross income. You don't have to put all of that in brackets. That was just what we discussed. And then you write deductions, allowances, taxable income. Right, this is what you're going to have to do for this individual. Do you agree?
Yes.
Okay, so now we go back to this question. And we're looking at the information. So let's read it. Jennifer Green is 38. Married, out of community property, has 2 children, 5 and 8. She has the following income and expenses for the year of assessment. Okay, fine. Income, salary and bonus. Okay, you should be thinking already about gross income. Gross income includes all the income. So does this meet the definition of income?
Yes.
Yes, it does. So salary and bonus will go here. Okay, straightforward, easy marks. That you should be able to get without much effort. Okay, it was 250 and 10. Okay, let's go back to the question. Then they tell you there were expenses. Contributions made to an RA. See, there's RA contributions. Now I'm thinking about the 27.5%. Okay, remember you have to learn that. You should know what those things are. I don't think... did they give you a formula sheet in your exam?
Yes, they do.
Oh, they do? Okay, so then just check the formula sheet on those exam pass papers and see what do they give you. If you've got the right tables, then you can use those amounts. Okay, she also makes a contribution to a medical aid fund. There's a donation made, note number 3, and there's a contribution made to a pension. Right, so there's 4 notes, there's 4 expenses. Right, where am I going to put those expenses? They're going to be considered deductions. Okay, we know donations, medical, retirement, and pension all meet the definition of a general deduction. Do you agree?
Yeah.
Okay, so let's put that in. RA contributions, medical aid, contributions, donation, and pension.
You know that 27.5%?
Yeah, the 27.5%, yeah?
Does it apply to it? So it obviously applies to the RA, and does it also apply to the pension contribution?
It's both. Remember, you combine the two. Okay, it's all. It's provident as well. Have a look.
Okay.
Where's that page? Here's it. Okay, I need to highlight this. There's it. It's everything. It's pension, provident, and RA. They just group them all together, and all of it must not be more than 27.5%. Does it make sense?
Yeah.
Okay, so it's everything. It doesn't matter what you're contributing towards. It can be pension, provident, retirement annuity. It's still a contribution towards your retirement.
Yeah.
Okay, where were we? Here. Alright, so we've got those amounts. We need to read the notes. Okay, so note 1. Jennifer contributed 300 Rand per month to an RA for the full tax year. Okay, so we need to show that. I need to show brackets 300 times 12, which is 3,600. Okay, there's the RA contributions.
Okay.
Right, so now I've looked at that. Look at note number 2. Jennifer contributed 2.5 per month to medical aid fund for the full tax year. Her employer did not make any contribution for the tax year. She had qualifying medical expenses of 10,200 for the current year of assessment. Her husband and 2 children are dependents on the medical aid. Neither Jennifer nor any of her dependents are persons with disabilities as defined. Okay, so this is looking at a medical contribution. Okay, have you covered the medical contribution yet?
Yes, I did. I went through it. Yeah.
Okay, so if I talk about it now, it'll make sense. You should kind of get what I'm doing, right?
Yeah, you get a rebate and things if you're under 65.
Yes. Okay, and you need to take a percentage of and all of that, the excess.
Yeah.
Good. Okay, that's great. I'm glad. It sounds like you've done quite a bit of work going through the material, which is good.
Yeah.
Okay, so it should help. Remember, the study guide is what you need to use, eh?
Yes, I have been only using.
Yeah, that's really good. Okay. Alright, so let's discuss that. Okay, well, do you agree if this is the medical, is medical a deductible allowance? No, it's a credit that you claim.
Yeah.
Okay, so that's something that will come up later. So I'm just going to put a note here. Legislation changed not so long ago. Medical aid contributions is now treated as a tax credit rather than a medical contribution. In the past, it was quite different. Okay, when I did tax like a few years back, it was different to what it is now because it's a credit rather than a contribution. It's slightly different to what it was before.
Okay.
Medical tax credits. Okay, it always changes. Every year the tables change, sometimes legislation changes. Right, so here we've got Jennifer contributing. Okay, we'll actually come back to this. Let's focus first on the RA stuff and then we'll come back. So I would highlight that in the exam to make sure I come back to it because I know it's difficult, it's challenging, it's something additional to consider. Okay, the donation. How much was the donation? Jennifer donated 50,000 to the University of Cape Town and received a Section 18A receipt. That's good. Okay, would she be able to claim that as a deduction? Yes, so long as it's in line with the taxable income. Okay, so obviously they're allowed to claim a certain amount. Did I close that file? Yeah, I did. Where's the PKF document? Let me open the PKF. Just want to show you this. Okay, here's the PKF 2016-2017 thing. You said they give you this in the exam, so they should have given you a note about donations. Where's the donations? Small business, provisional tax, medical, deductions, fringe benefits. Where's the donations?
Deductions.
Yeah, I'm looking for donations though specifically. It should be here somewhere. Did I miss it? Let's go back. Okay, let's look at the index. Deductions, there, donations. Deductions for donations, page 45. Page 45. 45. Here's it. It should be on this page. Let's see. Foreign investments, outbound investments, forward cover, South African offshore miscellaneous. Here. Oh, this is 41. I wonder. Sorry, page 45. Page 41. we go. There's it. Okay, it's here. Okay, donations to certain. Oh, okay, so see, they've changed it. Right, it's no longer 100,000, it's limited to 10%. Okay, that's even better. Okay. See? There's it there. Where's my highlighter? Okay, well, here's it. Individuals. Okay, deduction in terms of donations. Individuals limited to 10% of taxable income, excluding retirement lump sum payments and severance payments, and before deduction of donations. So you are allowed to deduct a maximum of 10%. Makes sense?
Yeah.
Okay, so let's go back. We've got 15,000. So is 15,000 deductible?
Yes.
Well, it'll be subject to 10%. So we need to show that just now, but we're going to show the 15,000 here. It would be a deduction that you would have as a deduction that would come off your gross income. Okay, then you've got pension. How much is the pension? Contributions made to a pension, 20,800. Notice though here, point number 4, Jennifer contributes 8% of her salary and bonus to the pension each month, and contribute the entire year. Okay, so that's what she's contributed, 20,800. Do you agree?
Yes.
20,800, close brackets. Okay, so now we need to apply the rules. So let's first look at her pension and her retirement annuity. Okay, what is the rule for pension and retirement annuity? Well, we need to know what her remuneration is. Is her salary and bonus considered remuneration?
Yes.
Yes. In this case, would her salary and bonus, well, would her remuneration be the same as her taxable income?
Sorry?
Will her remuneration be the same as her taxable income?
Yes.
Yes, because there's no other expenses that weren't allowed. Do you agree? Is that alright?
Yeah.
Okay. So this amount that we're going to add up, total equals, sum up that, this 260 is remuneration and taxable income. Does that make sense?
Yeah.
Okay, so if I've got 260 as her remuneration and taxable income, we need to know what the percentage limit is. Right, so 27.5% times 260,000 gives us an amount of 71,500. Okay, so is 71,500 allowable? Yes, this would be the maximum allowed.
Yeah.
Okay, in terms of what we just covered. Okay, so she can, if she contributed this amount, she'll be able to claim that amount. Okay, now we need to look at what were her contributions. Well, there's a contribution there. There's a contribution there. Okay, how much do those contributions add up to? Let's check. Total contributions equal. What is it? Let's check. Okay, 36 plus 20800. Okay, that gives me that amount, 24,400. Okay, this is limited to the lesser of what we just calculated, 71,500, and an annual contribution of 350,000. Right, so would she be able to claim everything she paid?
Yes.
Yes, she will. Good. Okay, so minus 36 here and minus 20800 there. Right, there's two deductions that would be allowable against her gross income. Got that?
Yeah.
Okay, what else do we need? We still need the medical aid contribution, which is a tax credit, and you've got the donation contribution. Okay, would we be able to work out the donation contribution? We can, because now we have the RA distributions. Okay, so I'm going to show this working here. the working here would be, open brackets, how much revenue did she earn? 250 plus 10, minus her pension, minus her RA. Okay, what does that give me? That gives me that. Okay, times that by 10%. That gives me how much? Gives me 23,560. So can she claim 23,560? Yes. This is the max donation deduction. What is she going to claim?
Yeah, 15,000.
The 15,000, because that's the amount that she paid. Good. Right, do you see how we do the calculations? Limited to.
Yeah.
Okay, and then we need the medical aid tax credit. So taxable income we can actually calculate. Sum up all of this stuff. Taxable income of 220,600. That's the taxable income that we have here, and then we're going to apply the medical aid tax credits. Okay, so you would have covered this in your book. I'm going to use this tax guide to work it out. Let's go to the medical stuff. Okay, where's the medical? Let's see. Okay, in the index, medical is on page. Medical expense tax credits there, page 9. Okay, page 9. Here's page 9. Right, so this is the medical expense, the tax credits. Medical aid contributions. Here's it. Medical aid contributions may be claimed as a medical scheme's fees tax credit against tax payable. See, notice it's tax payable, not taxable income. You see that? Do you see that?
Yeah.
Okay, so if I've got a tax payable line item, I first need to work out my tax. So that requires a table. Where's the tax table for an individual? There's the tax table for an individual. Okay, so which tax bracket does this woman fall under?
What's her income?
What's her income? Her income was, where's our working? 220,600.
So she'd fall under the second.
She would fall under this one, yes.
Yeah.
Correct, good. Okay, so this is the line item. This was for, oh, hold on. This is 2016, wrong tax year.
Yeah.
Okay, this is 2017, that's the right one.
Yeah.
Okay, sorry, wrong table. Okay, they gave me both tables here. Okay, so I need to put this one up. There's the table. Okay, so what am I going to do? I'm going to copy that little bit there. Okay, and I'm going to paste that in my working. Okay, and we need to work out a tax. Okay, so tax liability or tax to be paid equals, okay, 33840 plus 26% of open brackets, the amount exceeding that. So it'll be 220,600 minus the amount exceeding that. Close brackets equals an answer. Do you agree with that?
Yeah.
Great. Okay, so the working here, no, I don't want a number, I want a number, not a percentage. Let's get it back to percentage, number. Okay, there we go. That's how much he's going to have to pay in terms of tax.
Yeah.
That's her tax. Okay, this is the tax payable. Right, but because she contributes to a medical aid tax credit. Okay, so in the book here, let's go back to the medical stuff. There's the medical stuff. Okay, so what can she claim? Well, tax payable for the 2017 year is 2860. Okay, and 192. So 2860 per month, each for the taxpayer and the first dependent, and then 192 per month for additional dependents. Okay, how much kids is this woman married? Where is she? Here she. Jennifer. She's married. Okay, so there is a spouse. How many kids does she have? She has 2. Okay, so can I claim a medical tax benefit for her spouse and her 2 kids?
Yes.
Yes, I can. Right, we'll go back to that page. Okay, it's 286 and 192. 286 and 192. 286, okay, and 192. Right, so 286 is for the primary member. Okay, that was 286 per month, right? Let's just check out per month. Okay, so 286 per month times 12 months times 2 dependents. Okay, her and her spouse. Right, then she has 2 kids. 12 times 2. Okay, so her medical aid tax credit is going to be how much? Let's check. 286 times 24 gives me that. 192 times 24 gives me that. Okay, if I sum up those 2 amounts, I get 11,472. Okay, what is that representing?
Her medical tax credit.
Her medical tax credit, exactly. Okay, what else did the question say though? Jennifer contributed 2,500 to a medical aid fund. Okay, so she's contributing 2,500 per month to the medical aid fund. What else? Her employer did not make a contribution. She had qualifying expenses of 10,200. Her husband and her 2 children are dependents on the medical aid. Okay, fine. Right, so what is 2,000? Let me just grab the calculator. 2,500 times 12. I get 55,000. Okay, so let's work that out. Okay, so she contributes 2.5 a month times 12 months gives a total of 55,000. Do you agree?
Yeah.
Okay, that's the 55k. So that's an amount that she's contributing. She had qualifying medical expenses of 10,200. Okay, so is 10,200 going to be claimable?
Wouldn't it be 30,000?
What do you mean 30,000?
2,500 times 12.
I got 55. Did I make a mistake there?
I think so, yeah.
Let's check. 2,500 times 12. Oh. Okay, how did I get 55? Okay, the maths is weird. Maybe I should rather do it here in Excel. Okay, so I used the pocket calculator. I think I made a mistake when I typed it in. Okay, 2.5 times 12. Okay, yeah, 30 is right. Okay, so 30,000 is the amount that she's contributing. Do you agree?
Yeah.
Okay, what is she allowed to claim as a deduction?
11,000. No. Yeah. 11,472.
That's the tax credit, right?
Yeah.
Okay, so this 11,472 was for her husband, and 2 kids. Do you agree?
Yeah.
Okay, so now we need to look at, well, what is the excess? Well, she contributes that amount, right?
Yeah.
Okay, and she has this amount which is a tax credit. Do you agree? Okay, so what is the difference going to be? 30 minus that. Okay, 18,528. Okay, this was the difference. So that's her contribution, and that's her medical aid tax credit. Okay, so we need to look at how much more is it. Let's go back to the tax guide. What else do we say here? There's the tax credit. Okay, so younger than 65 years. Excess contributions and other qualifying medical aid expenses may be claimed as an additional medical tax expense calculated as follows. The amount by which the formula medical aid contributions, which we had, which was 30,000, minus medical scheme fees tax credit, times 4. I forgot to times it by 4. Do you see that? There's the legislation. Okay, so I'm going to copy paste that. I need to times this by 4. Okay, so 11472 times 4 equals what? Equals 45,000. Okay? 880. Okay, so excess contributions and other qualifying medical expenses may be claimed as additional medical expense tax credit calculated as follows. The amount by which the formula this minus that plus other qualifying expenses exceeds, notice, exceeds 7.5% of taxable income. What is my taxable income here? There's it.
22.
Yeah, 220,600, right?
Yeah.
Okay, so let's highlight that. 220,600 times 7.5% equals equals 16,545. Okay, so does the amount exceed 16,545?
Yes.
No, it doesn't. It doesn't exceed it. Okay, what is the difference?
Which amount?
The amount. So if we're looking at the excess. Okay, so how much does she contribute? 30,000. What is her tax credit? Because she's under the age of 65? 45,880. Do you agree?
Okay.
Okay, so was there an excess that's claimable? No, there wasn't.
No, okay.
Do you agree? Okay, the question gave you this. 10,200. Do you see that?
Yeah.
What is the 10,200 representing? Her qualifying medical expenses.
Okay.
Okay, so we're looking at her tax credit, and then now we're looking at the medical expenses. See? Let me highlight this. Let me put a circle around it. I'm looking at that. Do you see that? Okay, so other medical expenses. How much were the other medical expenses? 10,200. Okay. We need to look at the limitation. So, taxable income, 7.5% of 220,600 equals what? Let's check. Oh, I worked it out. Sorry. Why am I doing it again? Okay, you asked me about it. I did it here. There's it. You see it?
Yeah.
Okay, so I did it. There's it there. Okay, so how much is that amount? 16,545. Do the other medical expenses exceed it?
No.
No. Okay, this does not exceed the 16,545. This will not be deductible. Okay, so you can't claim it. Does it make sense?
Okay.
Okay, so how much tax is she actually going to pay? Well, she paid that amount of tax, so there's the tax. That amount. Okay, she gets a credit, so where's the tax credit? There's a tax credit. Okay, she gets the tax credit. And what else do you have to subtract? The rebates. Okay, so go to your tax guide here. Let me find the rebate. What is the rebate for last year? Let's check. Primary rebates. Primary rebate. The tax rebates, page 5. Page 5. There we go. Alright, so if she's under the age of 65, she's going to get a rebate of 13,500. You see that?
Yeah.
Okay, so this rebate is going to be claimed against her tax. Okay, so summary equals. Okay, tax on income or taxable income equals. Okay, I worked it out earlier. I'm just going to reference the figure. There's it. Okay, then less medical credits. Okay, medical credit was equal minus that. Okay, and then less primary rebate. Primary rebate, which is thought minus 13,500. Okay, so equals, sum up all of that. 17,344 would be her tax liability. Does that make sense? Still with me?
Yeah.
Not too bad, right?
No, not really.
Yeah, it's not so bad. Okay, let's save that. Perfect. Okay, let's see how we're doing. Did we finish that question? Let's see. Yes, okay, and then assessment criteria. Okay, perfect. So we've actually finished study unit 4.